Steve Hanke, professor of applied economics at Johns Hopkins University, joins us today. Steve, welcome back. We have a lot to go through. Currencies, vaccine, gold. Let's start with Turkey. Turkey is in an economic turmoil. Tell us about that. How is that unfolding as we speak?
Well, the turmoil, the epicenter of it is the Turkish lira, which has been one of the worst performing emerging market currencies during the last year that we've had. It's basically toast. The lira is toast. What has happened is that the reserves, the foreign exchange reserves, have plummeted in Turkey over the last year. Interestingly enough, they actually have increased their purchases. One of the few central banks that's increased their purchasing of gold. So now gold reserves, out of that shrunken amount that they have, the gold reserves amount to over 50% of the total reserves that they have. The problem with the gold reserves, it's very murky. We don't really know if those gold reserves have been used as collateral for other things and whether they're really liquid or not. But the bottom line is this: when you look at reserves, they're tiny. And when you look at obligations to service debt over the next 3 or 4 months, as well as financing the current account deficit Turkey has, they don't have enough reserves to do it. So then you ask the question, well, could they borrow money and do this servicing and financing? And the answer is, well, they probably could, but they'd have to be willing to pay higher interest rates to do that. And that is a problem because President Erdogan has an oddball idea. He has the world upside down. He says that high interest rates cause higher inflation and low interest rates cause low inflation. Now, everyone knows that that's not the way the world works. The fact of the matter is that real interest rates, that is nominal interest rates adjusted for inflation in Turkey, are massively negative. I measure the inflation, David, every day in Turkey. The annual inflation now is running 37%. And the official policy rate at the central bank is only 10.25%. So you have figured out you've more or less got a negative real interest rate of about 27% in Turkey. And under those conditions, under massive negative real interest rates, the currency is going down. The only and it's one that you want to stay away from.
Let's talk about the capital flows. Now, you mentioned to me offline that a negative real interest rate for Turkey means an outflow, a net outflow of capital flows. Well, we have in the United States a negative real interest rate as well. I mean, obviously not as negative as Turkey, but could we see the dollar continue to decline like the lira, because we have similar kinds of interest negative real interest rates?
The problem is it's everything is relative. So everyone has essentially, if you look around, all the big currencies have negative real interest rates. So maybe the U.S. is in relative terms isn't all that big, you see, and that's why the dollar remains. Actually, the dollar, oddly enough, does remain, I would say, a little bit on the strong side right now. I think it will eventually weaken over the year, probably, but that even that isn't a sure bet. When I say the strong side, against the euro, anything in the 120, 140 range is kind of in my comfort zone, and the dollar's, it's about 117. It's on the strong side, actually.
So earlier in the summer, Professor, Turks were selling their houses, selling their cars to buy gold as the lira essentially took a downward spiral. Why the gravitation towards gold?
Well, because the Turks traditionally, they love gold. And that's why the currency board idea that I have for Turkey is to have a gold-backed currency board. That would be the anchor, gold. So you'd make the lira as good as gold. It would be a clone of gold, and it would do very well in Turkey, stabilize the inflation. That 37% annual inflation rate that I just measured today would disappear overnight, and you'd have a huge boom in Turkey. So, and it has another advantage now, and that is the Turks have been buying at the central bank gold. The foreign reserve cover, the total reserves is now over 50% in gold in Turkey, very high, by the way, highest in the world. That's another signal they like gold, and they like it because it's not issued by a sovereign, you see. It's not like having dollar reserves that are issued by the United States, where if they got into some political flap with the United States, the U.S. could put sanctions on them or something like that. That's what the Turks are afraid of. But they can't do that with gold. Gold's not issued.
What do you think? What do you think about other currencies around the world, like the Hong Kong dollar, for example? I've had some analysts on the show that said we should be shorting the Hong Kong dollar because long term they're going to depeg. Should they depeg from the dollar?
No, they shouldn't. This is these people shorting the Hong Kong dollar have lost their shirt, their pants, everything else over the years. Hong Kong has a currency board. The Hong Kong dollar is a clone of the U.S. dollar. It's just as good as the U.S. dollar. It's operating perfectly through all the troubles they've had in Hong Kong over the last year. The thing is working like a charm. I've looked at some of the big shorters of the Hong Kong dollar, and they're so ignorant they don't even know how to read the balance sheet of the Hong Kong Monetary Authority. That Hong Kong dollar is as solid as a rock. Anyone speculating against it is literally needs to go to a doctor and be checked.
So let's talk about gold now, Professor Hanke. We knew that gold saw big moves on the downside this week as Pfizer announced a vaccine to be 90% effective. Before we talk about the gold sentiment index that you have and your way of measuring gold prices sentiment, let's talk about this vaccine. Do you think reaction to this news rather was fair, or do you think there was an overreaction to this news?
Well, I think the reaction is probably an overreaction because I believe uncertainty reigns in the whole sphere of vaccines, and the reason why there are three reasons actually. One is that it normally takes a much longer time duration to develop a vaccine. So this has been on a short time duration. So that's one thing that makes things uncertain. The second thing is that there have been a small number of people involved in the test. Usually they're larger than this. So we don't know for sure if it's actually going to work because of I think the small sample size. Three, even if the vaccines work, we don't know for how long they will work. In other words, if you get vaccinated, maybe the darn thing will wear off in a year because the virus is mutated and the vaccine that you've taken it isn't effective against whatever the mutation might be. So those are three things that lead me to indicate that probably there was an overreaction. There's an uncertainty reigns in this, but the clincher on this is the markets. You have to look at revealed preference to see what people are doing in markets, and in particular, insiders. You have to look to see what in the world insiders are doing. And all these announcements on the vaccine, the insiders are always selling. If you look at Pfizer, they announced on Monday and on Tuesday, the CEO, Albert Bourla of Pfizer, had sold 62% of his stock. So the insiders believe there was an overreaction and that there's a lot of uncertainty out there. And always market activity and market prices, and especially insider trading, they always tell you more about what the real story is than what you're getting when you're reading the newspapers and so on.
What does the 90% effectiveness mean? What does that actually mean? What is it effective against? What is a benchmark?
Well, The 90% effectiveness means that of those in the test, there was a 90% effectiveness. It did effectively work 90% of the time, which is by the way, it's a pretty high percentage on effectiveness and efficacy of a vaccine. But at any rate, that's just the numbers they've given us.
Yeah, 94 participants were part of the test. Without being too technical, is that a large enough number to be significant?
Well, now, as somebody in my younger days, I actually spent a lot of time, wrote a number of papers on optimal sampling theory. And this is getting out in the weeds, but if a sample is optimally designed, you actually can have a very small number that will make for a rigorous, effective sample. So I don't know how their sample was designed. So I can't tell you if 94 is actually a big number or a small number. I only can say that as the testing for vaccines goes, 94 is relatively small compared to what they usually do. But whether it's optimal or not, I don't know, because I just don't know the sample design. I don't think anyone knows they designed the sample.
There's a lot of people that don't want to take a vaccine, regardless of how effective it is in the test or how effective it's been reported. There's a notion that vaccines aren't good for you to begin with. Can you comment on that?
Well, I can assure you, as soon as one gets approved, I'm taking it.
Okay. Why is that?
Because I do have confidence in the science.
Okay. Fair enough.
Even though this is going to go on a fast approval and so forth, assuming it does get approved, I would be the first one to go over and get my vaccination. At my age, David, I don't want to get this damn thing.
Well, is there a risk? Is there a risk at all for a premature release of this vaccine? Maybe there's political pressure to have it approved on a fast track. You yourself said the testing duration was very short.
I think that, again, speaking for myself, I would be the first one to get in my car and go over to the pharmacy and get a free vaccine inoculation. So that's all I can tell you. Is there a risk? There's a risk in everything. I mean, there's a risk every day I get up, I'm going to trip on the carpet and fall down and break my hip, for God's sakes.
Let's talk about your gold sentiment now. You have a very unique way of gauging price activity. What is your sentiment telling you now? And, more basically, how does it work?
Okay. So first of all, you have to look, if you're looking at any commodity or any investment for that matter, you have to look at fundamentals. I think the fundamentals for gold are bullish. So that is a longer term perspective. But in the short term, you want to look at market action and sentiment. Now, sentiment, that aspect of the gold market, we're measuring that by doing what's called text mining. And I'm working with Abe Kaufness on this. Abe Kaufness, and Abe was one of my former students many moons ago, and he's quite an expert on measuring sentiment and dealing with sentiment metrics. So here's how you do it. We're text mining. So we're using a Python is the code we're using, and we go in to Google to see all the stories that are coming up on gold, and we can detect whether the 8-day moving average is moving up relative to the 20-day moving average, of just the frequency of these stories. And right now, the 8-day moving average is up above the 20-day moving average. So, but not it's not too strong. But there's some attention to gold. There are a lot of gold stories out there. So that's one thing. The attention is there. The 8-day moving average of stories is greater than the 20-day moving average. And then the question is sentiment. Or this Python program allows us to see the words in the text of these gold articles and determine whether they're positive or negative, whether they're bullish or bearish stories. So the stories are there. There's quite a bit of attention, but the sentiment is neutral. The bears and the bulls are almost exactly the same. So, and that's what's been happening to the price. If you look at the price, it's been in this kind of holding pattern for the last couple of weeks. It has gone down in the last couple of days, but not very significantly. So then we look at technical factors like the put-call ratio. And the put-call ratio on the big ETF is GLD. And if you look at the put-call ratio at the money, they're about the same. In other words, the number of puts and the number of calls is about the same. That's the same as the sentiment, the bullish bearish sentiment. So everything is kind of in a holding pattern with the fundamentals of gold being bullish, waiting for something to excite the market. And what we will see when we're doing this text mining is we get more stories about stimulus. That's going to be a positive. We will see. I think once we see that, gold will take off again.
All right, Professor, that was great. I look forward to catching up with you again to talk about your sentiment when it moves. Thanks very much for coming to the show today.
Thank you, David.
And thank you for watching Kitco News. Stay tuned for more. I'm David Lin.